Welcome back to another video. Today we're going to take a look at the NASDAQ 100 from an order flow, fundamental, as well as a technical perspective. We can't look at the sentiment data because the sentiment data for the NASDAQ 100 is not available to the public. So as always, if you are new to the channel, a sub would be appreciated, as I do provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know in the comments below exactly what it is that you would like for me to cover in my next video. Yes guys, you can ask me any questions and I will cover it for you. If you want me to break down a pair for you, I will do that for you as well. Okay, so we're going to look at the technical side first. So starting here on the technical data that we have here. So on the monthly time frame, what we have over here. Now on the monthly time frame, we can see the NASDAQ printed this nice impulse, and we can slowly see how the market is busy retracing. And if we take off Fibonacci there from the low to the high, you can see how the market has just tested and is rejecting the 61.8. Now for those of you that is in the signal group, we obviously took this buy off yesterday, but I'm not going to go into too much detail with that. We can also see how the NASDAQ 100 not only tested the 61.8 and rejected it, but from a monthly perspective, we can see how the market is still trading below this level of resistance that is now turned support. Now, it's important to keep in mind, also depending on where this monthly candle closed, we could potentially see the continuation to the upside, or we could see the continuation to the downside as well. Now, looking at the weekly time frame, what do we have over here? Now, from the weekly perspective, firstly, what we can see is last week we saw the NASDAQ 100 had broken and closed below the structural area that we had over here. And also, if you look slightly left, you'll see that the market also printed some structure there as well. So this area over here acted as resistance. The market broke above that resistance, came to test it multiple times as support. Support didn't hold, the market broke below that, and all of that support is now once again tested as the resistance. However, one thing to keep in mind is the wicks that we have in the market, because the wicks represents a price in the market that was once tested as well. So if we use our magnetic tool and we look at this wick that we have over there, we can see, if you zoom in, you can see how the market had closed above that wick, and the market came back yesterday testing this structure that we had over here, and we saw that massive pullback in the market as well. Now from a weekly perspective, we can see that we are still, as it is, trading below the structure that we had over there, regardless of the wick that we had in the market as well. So we have to be reactive and not predictive. On the daily time frame, what do we have over here? Now from a daily perspective, I think it's a lot more clearer. So the market was stuck within this range for quite some time, firstly. And what range am I speaking about is the one over here. So I'm just going to use that. So the market was stuck within this range. The market then broke below this area. So this area, this strong level of support got broken, and we can see how the market pulled back yesterday, testing it as resistance at the moment. Now, I always say the best way to approach the situation based off where we are now would basically to wait for the market to close above, to break and close above this level first, and then on the retest we can start looking for potential buying opportunities, because the last thing you want to do is to buy the market sitting at a strong level of resistance. They always say buy low and sell high. If you're going to buy here, you are basically buying high based on the structure that we currently have in the market here as well. Now, looking at the order flow data, so the commitment of traders, what the big banks, hedge funds and institutions are doing in the market. So we're first going to look at the report that was released on the 28th. Now we can see a base of the base of the report that was released on the 28th. Hedge funds, they came in and they started closing their buying positions, and they added plus 8,595 selling positions. And if you look at the price action, it is quite clear what we can see at the moment as well. You can see we had that massive sell-off in the market that obviously happened as we just started, or as we came out of December into January. The market started a massive sell-off, but those hints or tips was obviously sown before we even got into last month, because the report is from the 28th as well. Now, looking at last week's report, so this is the latest report. Now we can see a base of the report that we received last week. Hedge funds then came back and they added plus 237 long positions, and they closed minus 7,384 short positions, so selling positions. So we can see how the overall longs are sitting at 69,552, and the overall short positions are sitting at 47,827. And this was one of the reasons why we saw that massive pullback, sorry about the ads, why we saw this massive pullback happen in the market. Now, the best way to look at this from a technical perspective, so the support got broken and it's now turned resistance. There is a good opportunity that we can see the market potentially melt from where it is right now, purely based off the structure that we have at the moment. Excuse me. So the alternative way would be to wait for a break above that area. Then on the retest, you can start looking for buying opportunities, because in doing so the market would then print an inverted head and shoulders, which is considered a bullish pattern in the market as well. Now, I've said this before and I'll say it again: you have to be reactive and not predictive, and learn to adapt to the ever-changing market environment. So what does that mean? That basically means that if the market gives you a sign that it wants to go down, then you go that way. If the market gives you an indication that it wants to go up, then you go that way. But don't say that the market is going to go that way, definitely, because there's a lot of things that you need to take into consideration as well. So this is the way that you can approach the NASDAQ 100. We also have some very important data that's coming up this week, as well as the PMI data that's being released next week. But before we get to that, I want to quickly share with you guys one of the reasons that contributed towards this massive sell-off as well. So we can see here this article from CNBC reads: higher interest rates upset stock market as hot inflation test Feds. Now I'll explain to you how this higher interest rate does impact stocks in general, but I just want to read these key points to you guys very quickly. So US stocks resumed their sell-off on Monday, which is what we saw, as government bond yields continue to track upwards, a hint that many traders are certain the Fed will soon hike the rates. Now we know that that's going to happen in March, because it was initially supposed to happen in April, but then Powell got re-elected, and he decided to, it's almost like when you are, it's almost like when you get a promotion and you think you're the boss, and then you start changing things that kind of influences what your decisions negatively. It also says here traders say the pressure on the US stocks isn't thanks to the material concerns about the economy, but portfolio repositioning for higher borrowing cost. And what that basically means is that with the increase in interest rates, that basically means that whatever US citizen had taken out a loan in the past, that cost will now be increasing, which makes it even more difficult for the consumer, and that can also lead to higher inflation, which is what we expect to happen in the US dollar as well. It also says here now you have the potential for interest rates, which appeared like they might not be start going up until June, said this guy Charles. Now there's like an 80% probability that it will happen in March. Now that's one side of the story. So the reason why you will always see a massive sell-off when interest rates go up. Now it's very easy to understand that if you own a shop, or let's just take a place like Apple for instance, right? So Apple sells iPhones at, I don't know, maybe $100 at the moment. So what that basically means, on credit, maybe for $100 per month at an interest rate of 0. So that means that the consumer would not be paying any interest on that. So what happens now is if you bought an iPhone in February that where you had to pay $100 per month, what it basically means now is that when the interest rates goes up, you will still have the same iPhone, but that means you will pay a higher price. Also, the profit margin that the company in general will accumulate will now be a lot less, because of higher interest that they need to pay on that profits that they accumulate on a monthly basis. So basically, it means that you know house loans, car loans and all of that stuff was taken at a low interest rate. And what that means is that when the interest rate goes up, they now need to fork out more money, putting them in an even more difficult situation that could lead to people defaulting on their payments or whatever the case is, which could have a negative impact on the economy because people won't be able to go out there and buy now because of high interest rates. Now, the next thing I want to speak about also here is the the Omicron cases. So the reason why I'll always speak about this is because I always look at I always look back at what happened here in 2022 when the coronavirus first started off. We saw a massive sell-off in the stock market purely because people are not going out there to spend money. People lost their jobs, and all of that happened there as well. So the reason why I'm bringing this up is because that history normally repeats itself. So the average daily new COVID cases rises up to 50% over the past week. In the United States, it's an averaging at about 754,000 cases per day. Okay, per day, not per week. Per day over the past week, and you can already imagine that's almost 7 million in 2 weeks, according to the data compiled by Johns Hopkins University, and over 50% increase from previous weeks as the Omicron variant continues to rage across the nations. That number includes a report of a record excuse me, of a record of nearly 1.5 million cases Monday, some of which occurred over the weekend, when many states hold data reporting. The country is reporting an average of about 1,650 daily deaths as well, which also mean on the rise, but roughly half the peak level seen at this time before vaccines were widely available. Now, coming back to the technical data, because this is obviously where we need to make the trading decision. Now, the first thing that we need to take into consideration is the market had broken below the strong level of support that is now turned resistance. Now, if you've got a strategy that you trade, the best thing to do is just start waiting for your rules to get satisfied from this level, and then you can definitely look for selling opportunities to the downside. Now, if you don't know where you should sell the market to, all you do is take your Fibonacci there from the high to the low, where the where a rejection to the at the 61.8. You then just adjust your fib there to that level, and this will be your target level over here that you can definitely look for potential selling opportunities in the market as well, for the market to create that lower low. Alternatively, if anything should happen that's going to move the market up, basically all you want to do is you want to take your Fibonacci there from the low to that high, probably about there, and then this would be your target level to the upside. Your first target level to the upside would be up until there. You could potentially um, you know uh, you could potentially do a trailing stop loss and just ride the market as it goes along. But again, that's less likely to happen. Again, we have to see what the market presents us with going into this week. So guys, if you enjoyed the video, as always, please share the video with other people that's looking for such valuable content as well. Not only will it help the channel grow, but it will also help me help you in the long term as well. So as always, thank you so much for your time, and cheers for years.